Now, another bunch of bankers are up before the beaks in Parliament tomorrow. This time it's the people who advise the government on the selling off of Royal Mail, which, to judge by the price at which shares are changing hands in the market, was knocked down for a song. Trades unions are throwing about words like gross incompetence to describe the bankers who advise the government, or even theft. They're demanding that no more money be given to what the offenders amusingly called professional advice. Andy Verity reports.
The first privatisation in 8 years put its own special strain on the Royal Mail sorting offices. 6 weeks ago, applications poured in from 700,000 individuals wanting a stake in a business that they at least thought was a bargain. Their holdings were capped at just 750 shares. So into whose hands was ownership of the Royal Mail delivered? Here's who ended up as the biggest private shareholders in the Royal Mail. The top shareholder is a hedge fund, the Children's Investment Fund Management Limited, with 5.8%. The next biggest is a sovereign wealth fund run by the government of Singapore, GIC, with 4.1%. The next is a huge sovereign wealth fund investing oil money on behalf of Kuwait, with 1.4%. And behind them, with rather more modest stakes, the big city shareholders Standard Life and Threadneedle, followed by other hedge funds, mutual funds and sovereign wealth funds.
For the government, it's a mixed bag. They've got some of what they wanted, but they've also got some of what they really didn't want, which could produce political problems in the future for them.
At least 20 city institutions got in at the ground floor, taking over 500 million shares at a price of £3.30. As soon as trading started, the price jumped by a third, and today they closed at £5.50 a share, up 67% on the float price. Their gain is the taxpayers' loss. The initial flotation fetched £1.7 billion. If the float had been priced at today's level, it would have fetched £2.8 billion.
Well, the taxpayer have lost out. Who have made money are institutional investors, are the banks who've been advising on the deal. They have commissions of over £15 million to be paid out. Some small investors who had applied for a lot more shares than they got sold very quickly, and they made a little bit of money out of it. But it seems to be the two biggest investors here are two hedge funds, the TCIP hedge fund and indeed the Singapore Sovereign Wealth Fund. So it looks as though there's been a lot of money made by a small number of people here at the expense of the taxpayer.
After selling a further 8%, the government's left with a 30% stake and some serious questions to answer. City players from Citibank to JP Morgan had said Royal Mail could be worth upwards of £6 billion. So why did Vince Cable choose UBS and Goldman Sachs to run the flotation, who'd valued it at £3.3 billion? His critics say it was just natural, given how negative he'd been on the Royal Mail for years.
The government was very public about all the problems at the business, saying that mail volumes, its traditional source of revenues, were hemorrhaging and could really fall off a cliff, saying that the business was short of cash and saying that the business really had severe industrial relations problems. Now, this isn't a very promising prospectus to take the business forward. It's simply like trying to sell a car by announcing that it's just failed its MOT and that its engine's about to fall out. You're not going to get a good price. People will look at it and say, well, it's not going to run for very long. I may give you a few quid.
What's happened to this dusty old building not far from Tottenham Court Road is one piece of evidence to suggest that Royal Mail's property portfolio may be worth a lot more than has previously been estimated. Its owners, Great Portland Estates, have just celebrated getting planning permission to turn it into offices, shops and residential, worth not 120 million, but £500 million. To city brokers on the day of Royal Mail's flotation, it was obviously undervalued. Dismayed at their modest 750 quid's worth, thousands of individual investors banked a few hundred quid of profit and sold, with hedge funds and sovereign wealth funds among the buyers.
Even on the first morning, the shares still yielded 5%, even in the secondary market price, and people were still finding that attractive. And of course, you have many people finding that attractive and buying, yet many speculators taking their profit on the first day, the so-called stags taking their money out, making that short-term profit, the quick buck.
Who was buying?
Long-term investors, people that want the dividend, people that can see the attraction in the property assets, and the growth story of parcels.
Just off Bond Street in London's West End are the headquarters of the Children's Investment Fund Management, run by Chris Hone. In spite of its name, it's been called one of the most aggressive hedge funds in the country. Now it's got a stake in Royal Mail worth over £300 million. So the reason I wanted to speak to this man so much is that Chris Hone, who runs this hedge fund, is known as a corporate activist. In other words, he takes big stakes in companies and then he tries to make changes happen. I wanted to know what his intentions were with the Royal Mail, but unfortunately he wasn't available for interview. Hedge funds like to be discreet. Vince Cable initially said Royal Mail's high price was froth, but he also revealed something else. We now know that at the last minute, the Business Secretary Vince Cable did consider setting a higher price for Royal Mail, but the institutional investors who he so wanted on board said that in that case, they might not buy as much of the stock, and UBS and Goldman Sachs advised against it. Mr. Cable said that in sticking with the low flotation price, he was following advice from Goldman Sachs and UBS. Tomorrow, MPs will be able to ask them if they were giving firmly held opinions or telling their client what he wanted to hear.
That was Andy Verity reporting.